Another question this morning. Is an important change coming to Federal Reserve policy? That is the question in the morning. I want to bring in senior economics reporter Steve Liesman, who may have the answer.
Andrew, thanks. Here? A pause in Federal Reserve rate cuts is increasingly likely either at the upcoming October meeting or more likely after one more cut, according to comments from several Fed officials. What the Fed does will depend critically on the upcoming date in the next several weeks before this coming October 29th meeting. Positive developments in trade talks with China and the apparent Brexit breakthrough this morning could also argue in favor of a nearer-term pause. Support for a pause, even one that could happen in October, comes from comments made this week from Chicago Fed President Charles Evans. He's a strong backer of recent cuts, but he said he didn't see any more cuts this year. Dallas Fed President Robert Kaplan said yesterday he is, quote, agnostic about additional cuts. And Fed Chairman Jay Powell was neutral in a speech last week, careful to say only that decisions are being made meeting by meeting and that the Fed would, quote, act as appropriate. The Fed could still cut in October or instead December before pausing. But recent comments suggest the market's pricing of an 83% probability of rate cut. Well, that might be just a bit too high. Fed officials think they've already provided considerable stimulus to the economy in three forms. Let's go through them. First, they backed off planned rate hikes this year. That's a form of stimulus. Second, they stopped reducing their balance sheet. Another form of stimulus. Third, they have cut rates twice by 25 basis points each time. That stimulus in the pipeline is why many Fed officials insist they're, quote, in the right place. It means they think they've already anticipated current economic weakness, like yesterday's slowdown in consumer spending. If it hasn't, Fed officials have been clear they will do more. But a pause, it'd give them time to see how existing stimulus is going to affect the economy. And adding support to the idea, Fed's pretty divided over the next move. A pause could give time for the data and developments to clarify the right policy. I'll tell you guys, John Williams speaking this afternoon and Richard Clarida tomorrow. Those are going to be key to sort of setting the direction here as to whether the Fed wants to claw back more space to make up its mind at the October meeting. In other words, move that rate cut into December or do it in October and say, you know what, we need to stop and look around here.
Steve, I respect your opinion on this and obviously your analysis of what may be happening. As you mentioned, the Brexit talks today, if that actually goes forward, then the idea that the China trade talks, we've got some pause time on that to get through to November. Why would they move in October if they're waiting to see those two things?
You know, it could go, this trade thing could go either way. If you think about the idea that a third disappointment to the markets here, if nothing happens, or this idea that, hey, we're taking this off the front burner, which I think is one of those metaphors that's more literal than not, you know, because it really is on the burner. And if that comes off the burner, that's going to be very decisive for the Federal Reserve. And I think you could end up, I mean, this thing could get immeasurably worse or immeasurably better with the signing of a piece of paper.